a big show because the stories we are covering are not just random headlines. They are all well connected. They are energy, AI, crypto, identity, and trust. And when all of those start moving at the same time, that is when you need to pay attention. Because today we are looking at a world where conflict is pushing oil higher. AI is changing how the internet works, and crypto is once again showing both its biggest promise and also its biggest dangers. So, this is definitely a show you want to stay for. First, we'll start with the story driving global markets right now. Oil is jumping yet again, and the reason is quite simple. Tensions around the Strait of Hormuz are rising fast. Ships are attacked over the weekend. The US and Iran are both taking action. The ceasefire is breaking down, and suddenly, one of the most important energy routes in the world is back at the center of the market. So, we're going to break down what happened, why oil reacted so fast, and why this matters even if you do not trade oil at all. Because if energy prices keep rising, that feeds into inflation, that feeds into transport costs, and the broader economy. Then we shift into AI. And when we talk about AI, the first company most people think of is Nvidia, and actually for good reason. Nvidia is now a $4 trillion company. And behind the success, there is a very important question that we are asking. Are the biggest tech companies quietly trying to break free from Nvidia's grip? We are going deep into Jensen Huang's latest interview, where he pushed back hard on the idea that customers like Google and Amazon are moving away. We'll break down the real battleground around CUDA, AI chips, and custom silicon, and why NVIDIA believes it is still building the operating system for the future. So, if you want to understand the real power behind the AI boom, do not miss that segment. After that, we'll move into crypto regulation. So, South Korea is changing its tone on stablecoins. And that is a big deal because South Korea is one of the most active crypto markets in the world. Now, Circle and Tether are trying to move in, but they are doing it in a very different ways. One of the companies is working inside the system. The other is trying to grow usage first. So we'll break down why Korea matters, what this means for the future of digital money, and why this could become a model for how other countries approach stablecoins. Then we'll go into one of the most important internet stories of the year. Very soon, you may need to scan your eyes just to prove you're human online, not to open a bank account, not for passport, but for dating apps or maybe even Zoom calls. That sounds crazy, I know, but that is exactly where things are going. We will talk about Sam Altman's World Project, why platforms are moving toward proof of humanity and the trade off between safety and privacy, because the internet is changing fast. And the question is no longer just what AI can do. The question is how humans prove they are still human. Then we get into Michael Saylor and strategy because Michael Saylor is not just buying Bitcoin anymore. He's redesigning how investors can hold it. We'll break down the new move around STRC, why he wants to pay dividends twice a month, and how he's trying to turn Bitcoin exposure into a more stable income product. So, if you want to understand how Bitcoin is being repackaged for the next wave of investors, that is a segment you want to watch very closely. Then we dive into a huge DeFi risk. This is one of the most important crypto stories of the year so far. Nearly $292 million was stolen from the KelpDAO. But the biggest problem, like the bigger problem, is what happened next. The damage even spread to Aave. Liquidity got lost. Users who did nothing wrong suddenly found themselves exposed. So we are not just talking about the hack itself. We are talking about what it revealed, that in DeFi, the danger is often not the platform you're using directly, it is the platform connected next to it. And this is a lesson every crypto user needs to understand. Finally, we close with a very brutal token collapse. So a token called RAVE went from almost nothing to billions in market value, then crashed back down to nothing. So over $5 billion gone in 2 days. And once again, Binance is in the story. So we are going to talk about concentration, exchange behavior, pump and dump dynamics, and why retail traders keep getting trapped, keep getting wrecked in the same game over and over again. Because the real story is not just the crash. The real story is the system behind it. So today's show is really packed. We've got oil and geopolitics, Nvidia and AI arms race, stablecoins, digital identity, a major DeFi security failure. And the reason to stay all the way through is quite simple for this show. Like these stories may look separate, but they are all about the same thing. It's about like who controls the system, who controls energy, AI infrastructure, who controls money, and who controls identity. And that is the bigger theme today that we are watching very closely in this episode. So without further ado, let's get straight into it because we'll start with the story that moving markets right now. So oil is spiking. The Strait of Hormuz is back in focus and the risk of a bigger conflict is rising. So let's break it down very simply. So, the reason why oil is rising yet again is the US and Iran situation. They are not de escalating, they are actually escalating instead. Everyone is eyeing at the Strait of Hormuz, but just over the weekend, ships were attacked. So, here's what we know so far. On Saturday, Iran's military fired on a tanker in the Strait of Hormuz. Another ship was also hit. Then on Sunday, things escalated. The US Navy fired on an Iranian container ship in the Gulf of Oman. And later, the US Marines took control of that ship. So now, both sides are directly involved. Not just warnings, but real action. And of course, the markets reacted very, very quickly. Oil prices jumped sharply. So, like here, we actually assume here is the past month performance, but like the pump that I'm talking about is like from 17th of April, just 3 days ago, we were trading around like $87 per barrel, but it quickly jumped up to $96 per barrel. That is actually a very big move in such a short period of time. Because when this region becomes unstable, energy prices move fast. Now, here's where it gets even more serious. There was supposed to be a ceasefire, but that ceasefire is about to expire, actually. And both sides are already accusing each other of breaking it. The US said Iran attacked ships. Iran says the US is still blocking exports, so trust is breaking down very fast. And just days ago, Iran said the strait was open. Markets actually calmed down a little bit. If you go back to the oil price, well, as I mentioned, it dropped to $87 per barrel. But then, like within 24 hours, everything changed. Iran reversed that decision and said the strait is still closed until the US removed its naval blockade. So now we have a standoff actually. And this is already affecting real traffic. Some oil tankers are turning around, others are still waiting, and some are trying to pass through before things get worse. And that creates confusion and risk. And that's exactly why prices are so volatile for oil. President Donald Trump is also raising the pressure. He warned Iran again, like saying the US could target major infrastructure if no deal is reached. At the same time, talks were supposed to happen, but now Iran says it will not attend. So right now, there are no active negotiations. So this is like everyone's asking what happens next. Like, do we have a deal, or does this turn into something bigger? Because right now the signals are very mixed. So on one side there are talks. On the other side, we now have military action, and that's a very dangerous combination, if you ask me. Even if you're not trading oil, this still affects you very much because Higher oil prices mean we're going to get higher fuel costs, higher transport costs, and even more pressure on inflation. And that can impact stocks, crypto, and the broader economy. So the bottom line is the situation is moving very fast. We went from a possible deal to ship attacks to military action all within days. The Strait of Hormuz is now the center of attention, and markets are watching every move. All right, so coming out next, we are shifting from global conflicts to the AI sector. And when we talk about AI, the first company that pops in your mind, I'm sure, is Nvidia, and of course, in a good way. I mean, in a good way, okay? Nvidia is the most important company in the world right now. If we quickly hop onto the chart, like top asset by market cap, you can see the first one is, of course, no doubt gold. So market is trading at $33 trillion. And look at the second one. It happened to be Nvidia. So it's trading at $4.9 trillion. But behind the scenes, a massive debate is raging. Are Nvidia's customers secretly trying to kill its greatest invention? I'm talking about CUDA, and it is a software mode that makes Nvidia chips so hard to replace. But critics say Google and Amazon are building their own chips to escape Nvidia's high prices. So that is this actually YouTube episode, this interview, almost 2 hour long. So Jensen Huang finally lost his cool in this interview. Like if you guys have time, I highly recommend you check out this interview. So Jensen Huang was being asked, are the tech giants moving away from you? His response was very blunt. He simply said, your premise is just wrong. So today we go inside this interview. Like we look at why Jensen Huang thinks software agents are about to explode and why he believes nobody, not even Google, can catch him. So let's start with the business model. So Jensen Huang has a very simple way of looking at NVIDIA. He says input is like electron, so output is token. So in between those two things, that's NVIDIA. The host asked Jensen Huang a very tough question, like if AI makes software cheap and easy to copy, won't NVIDIA software lose its value too? And Jensen Huang's answer was a masterclass in tech philosophy. He says making a token is like an art form. It involves science, it involves engineering and invention. So it's not just a commodity. He believes we are moving into the age of AI agents. So if we think about it, right now we are limited by the number of human engineers. But in the future, millions of AI agents will be using software tools 24/7. This would not make software cheaper. It will make the demand for chips exponentially higher. Now, let's talk about the secret mode. It's not just the chips, it's actually the supply chain. Nvidia has committed nearly $100 billion to buy parts from its partners. Some analysts say the number is actually closer to $250 billion. Jensen Huang explains it like this. So here's how he said it. He goes to the CEOs of the big factories and say, like, build more capacity for me. They actually listen because Nvidia has the most customers in the world. They won't build those factories for a small startup, of course, but they would do it for Jensen Huang. He also addressed that the doomsayers, like people say we will run out of chips or power. So Jensen Huang isn't worried about the chips. He said any bottleneck in manufacturing can actually be fixed in 2 to 3 years. The real problem, though, is actually energy. You can't build an AI factory if you can't plug it into the wall. And that is the one thing Jensen Huang said he can't just fix alone. Then it comes to the most intense part of the interview. The host actually pointed out a really good point. So he said that Google's TPU and also is a TPU on the left and Amazon chips gaining some attention around. 2 of the 3 AI models were trained on Google's hardware, not Nvidia's right now. So the host asked Jensen Huang, like, does it mean you are losing the lead? So Jensen Huang actually fired back. He said Nvidia's Nvidia built accelerated computing, not just a TPU. A TPU is good for one thing, which is math for AI. But NVIDIA's GPU can do everything. So we talk about physics, weather patterns, drug discovery, and also AI. He calls his architecture Formula One. So anyone can drive a regular car, but you actually need a pro to handle an NVIDIA chip. He even challenged his rivals. Like he said, if these other chips are so much cheaper and better, why won't they show that data in public tests? His message was clear. Nobody wants to show their numbers because they can't beat NVIDIA's total cost. Then Jensen Huang, let's go back to the interview. So Jensen Huang was asked another interesting question. Like, this is what the host said. Like, with all the cash, why don't you become a cloud provider like Amazon, like Microsoft maybe? His answer was very surprising. NVIDIA's philosophy is to do what you must do, but as little as possible. He believes if NVIDIA did not build the hardware or the CUDA software, nobody would. So they must do that. But the world already has plenty of cloud companies. He doesn't want to compete with his own customers. He also touched on a regret. He admitted NVIDIA was too slow to realize how big AI labs would become. They did not invest in OpenAI, nor they did for Anthropic early on. He called that a cognitive error, but he said he won't make that mistake again. Nvidia is now a major investor in the biggest AI names in the world. Then the final question was a what if asked by the host. Like, if the deep learning revolution never happened, what would NVIDIA be doing today? So Jensen Huang actually did not hesitate. He said the exact same thing would happen. So NVIDIA was built to solve the end of Moore's law. Like CPUs were getting were getting too slow. NVIDIA was always going to build accelerated computing for science and engineering. So the verdict, like after watching this interview, like I would say Jensen Huang is not just a CEO. He is actually a believer for his own product. He isn't worried about the competition because he thinks they are playing a different game. They are building single-use tools. He is building the operating system for the future. Whether you like him or you fear him, like one thing for certain is that Jensen Huang is not backing down. He is betting another $250 billion that he is right. And there you go, guys. That is all you need to know about today's world of NVIDIA. All right, so we'll take a short break from here. When we come back, we are diving into a Asian country. So South Korea, we talk about the stablecoin shifts that they are doing right now. There's a new battle is starting, another rival between Circle and Tether. So if you're intrigued, make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxum are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxum TV, and thanks for sticking around with us after the break. So now let's talk about stablecoins, because something big is happening in South Korea right now. After years of straight rules, the country is finally opening the door, and the two of the biggest players in crypto, being Circle and Tether, are already moving in. But here's the key point. They are taking very different strategies, and that tells us a lot about where this market is going. So actually, for a very long time, South Korea was very cautious with crypto, especially with the stablecoins. But now the tone is changing. The central bank is starting to say stablecoins could play a role in the financial system, and that is, of course, a big shift. Because before this, the focus was on control. Now the focus is on how to manage and use them. But this is very important because South Korea is not opening everything at once. They are actually taking a slow approach. So the first step is to let banks take the lead. So Korean banks may be the first to issue stablecoins. Then later, maybe other companies can join. So this is not a free market just yet. It is in a very controlled manner, I would say. And Korea is building something very specific, which is a three-layer system. So first is the bank-issued digital money. Second is the Korean won stablecoins. And the third one is the foreign stablecoins, like a dollar-based one. So instead of one system, they are building a structure with different roles. Now, let's talk about Circle first. Okay, Circle is the company behind USDC. And the strategy for South Korea is very clear. They are not trying to control everything. Instead, what they're doing is that they are working with the system. So how Circle put it is to let local banks issue Korean stablecoins. They will provide the technology, they will provide the infrastructure. So they position themselves as the engine behind the system, not the face of it. That is actually a smart move because regulators usually trust local banks first. So by working with banks, Circle increases its chances of getting approved and staying long term, and they are thinking ahead. Now, if we shift to Tether on the other hand, so Tether is of course the company behind USDT, their approach is more quiet. They focus more on usage and they are talking to exchanges, talking to financial groups, trying to expand how USDT is used, especially for payments and trading. So there is a huge difference between these two companies, these two stablecoin giants. Circle is focused on the system, Tether is focused on demand. Circle wants to be inside the rules. Tether wants to grow usage first. So two very different strategies. This is not just about South Korea. This is about the future of stablecoins because South Korea is one of the largest crypto markets in the world. If stablecoins become official there, it could set the model for other countries. But we are not there yet. There's still big questions we need to ask, who can issue stablecoins in South Korea? Can non-banks join as well? Will foreign companies need local licenses? And how strict would the rules be? All of this is still being decided. But the bottom line is South Korea is moving from a no to maybe how to regulate, from blocking stablecoins to building a system around them. And right now, Circle and Tether are racing to take position, not just for market share, but for control of the future financial system. All right, so I do want to shift gears a little bit, and I do want to talk about digital identity because very soon you might need to scan your eyes just to prove that you are a real human online, not for security, not for banking, but maybe for things like dating and Zoom calls. So, like, why am I suddenly bringing this up? Because big platforms like Tinder, like Zoom, are starting to test a new system. So, this system is called Proof of Humanity. And how it works is that you scan your iris, so your eye, using an app or physical device. Once verified, you get a badge sets that, oh, this is actually a human. So, Jamie is actually a real person. So the system comes from a project called WorldCoin, or right now I think they changed the name to World. So this was actually started by Sam Altman, the same person behind ChatGPT. And the idea is quite simple. Like the internet is filling up with AI, so we need a way to tell who is the real human and who is not, because the problem is getting worse so fast. Like on platforms like Tinder, fake profiles are everywhere. Like some estimates say up to 30% of profiles could be AI powered scammers. These are not simple bots anymore. So what they do is that they use fake photos, talk like real humans, build those emotional relationships, and of course they steal money afterwards. So in the US alone, romance scams caused over $1 billion in losses last year. This is actually also hitting not just the romance romantic platform, but also workplaces. So on Zoom, deepfake technology is getting really scary at this point. Like there was a real case where a worker sent $25 million because he thought he was actually talking to his boss on a video call. But of course, it was fake, it was AI generated, and very convincing, of course. The solution being pushed here is digital identity, like one human, one verified ID, and your eyes, like your eyes will become your password. And once you scan your iris, you get a unique ID that's stored on your phone. That ID proves that you are a real person. So some people would ask this weird question, like why they are scanning your eyes, because like actually when WorldCoin just came out, it was really weird. Like they have this device and scanning everyone's eyeballs, and you end up getting some airdrops, getting paid for giving out your digital identity, your privacy. So people are asking why the eyes so specifically. Well, that's because your iris is extremely unique. I would say even more unique than fingerprints, and that's why everyone is using it, especially for tech platforms. So, like so far, talking about WorldCoin, or the project right now changed to World. So far, over 18 million people have signed up. The systems has been used hundreds of millions of times. So this is not small anymore. This is scaling. But like, let's be honest, like this raised a serious question. Like, do you really want to give out your biometric data to a tech company, even if they say it's private, is anonymous? Because like once your biometric data is out there, you can't change it. You can't change a password, but you can't like you can change your password, but you can't change your eyes. And so this is a huge trade-off for sure. But speaking of WorldCoin, I'm not sure if any of the viewers of Roxham TV were into WorldCoin when it came out, because it has been around for quite a few years. And then, as you can see, like the token price, it dropped 88% if we're zooming out to max. And if we scroll down to its all-time high, it's actually down 97.8%. So I don't have conviction that this project is coming back. Like in fact, most of the crypto projects that we're seeing right now, I don't have conviction is going to come back. But like I do have to make a clear division between Bitcoin and crypto. So like crypto, I don't have much confidence. Altcoin season, maybe a selected very selected, a very small portion of that altcoins. We're talking about maybe 0.1% of that altcoins would have a so-called alt season. But generally speaking, I don't think altcoins will come back or crypto is going to come back. But Bitcoin, that is a long game. So okay, let's go back to the story about scanning your iris. So this is a bigger story. We are entering a world where AI is everywhere. Fake humans look really real. Real humans need proof. So now we have a choice, option one for here. You want to, maybe you can stay anonymous, but risk getting scammed online. Option two is that you give up your privacy, you verify yourself, and you give up your biometric data. So that is definitely a trade-off. Because this is not just about Tinder, it's not just about Zoom. This is about the future of the internet. If AI keeps improving, soon you won't be able to tell if you're talking to a real person or just a machine. Some people believe in the future, every account online will need proof. Every transaction, every interaction, because AI will flood the system. And without identity, trust breaks. So the real question is, do you want a safer internet or a more private one? Because in the future, you may not get both. And that is the trade-off. And that's why we're paying attention here on Roxham TV. All right, so let's shift gears and dive into the next topic. I do want to talk about the hottest ticket in the digital finance world right now, being STRC. So this is the stretch preferred stock from MSTR, MicroStrategy. And Michael Saylor is about to change the rules of the game yet again. So he just filed for a proposal to do something very unusual. He wants to pay dividends twice a month. If you're looking for a way to maybe play the Bitcoin boom with more stability, this is a segment for you and you want to pay attention here. So right now, the STRC preferred stock pays a dividend once a month. This is it is a massive hit with investors, carrying a high yield of 11.5%. But Michael Saylor wants to move to a semi-monthly schedule. That means a paycheck every 2 weeks. Now, to be clear, this does not change the total amount of the money you get. The yield stays the same, the company's debt stays the same, but the timing changes. Michael Saylor says the goal is quite simple, which is to stabilize and dampen the swings. He wants to make the stocks as steady as a heartbeat, even when Bitcoin is going wild. Now, you could be asking, why is he doing this, changing the time? Does it even matter? Well, the reason why he's doing this because the volatility-wise is working. So if we go to the dashboard of MicroStrategy, so STRC, and when STRC first launched, its volatility was sitting at 13%. But over the last 2 months, that has dropped to just 2%. So by paying out every 2 weeks, Michael Saylor believes he can drive even more liquidity. He wants more people buying and more people selling and less drama in the price action. The numbers tell the story. So the total value of these stretch shares has exploded to $6.4 billion. Investors are hungry for the 11.5% return, of course. If the vote passes on 8th of June, the first 2-week paycheck will land on 15th of July. So while this is happening, MicroStrategy, so MSTR main stock, actually jumped nearly 12% on Friday. Bitcoin itself pushed through 77K over the weekend. Saylor is successfully building a Bitcoin bank where you can get the growth of the coin, mixed with the steady income of a high yield stock. And for our viewers watching right now, if you want to get into some of the action, maybe using a stablecoin to get STRC, just a quick shout out, STRC is officially available on Roxham Exchange. So if you're holding Bitcoin and if you don't want to swap it for STRC just to catch the 11.5% yield, You can do it right now directly on Roxum exchange. So it's just like roxum.com. It's really fast. You do have to do KYC though. Once you deposit your Bitcoin, like it's a straight away, you can purchase that STRC and earn that juicy yield. Actually, so I forgot to mention. So Roxum is actually a Bitcoin exchange. So instead of earning that yield from in a USD format, you're earning that yield in BTC. So you're actually getting more BTC, and it sounds really attractive to Bitcoin Maxi if you ask me. So, anyways, the bottom line of this is that Michael Saylor isn't just buying Bitcoin anymore. He is re-engineering how people own it. Like by moving to a semi-monthly dividend, he is turning a volatile Bitcoin bet into a steady institutional machine. Like he wants to make STRC the most liquid, the most reliable yield in the market. And judging by these $6.4 billion already invested, the market is listening. So do check it out if you are into the STRC pairs, and do hop onto Roxum Exchange if you want to swap that from BTC to STRC. Well, anyway, so speaking of Bitcoin, let's hop onto the Bitcoin charts and do a quick analysis, a quick update, because we haven't done so in a week, I believe. So anyways, like over the weekend, it has been quite a joyful rally. We pumped to $78,000. However, I love how TA is working exactly like we put out the patterns right here. We're zooming out. We just like whenever we go to the key resistance that I drew months ago, so whenever we go to the key resistance, we end up getting rejected. So point being, I know people are saying, oh, the bear market is over. We are heading to a happy place right now. We're going higher. But however, if we zoom out, this is a bear flag, two bear flags that I drew out months ago. And we are just like hitting the key resistance. So that's exactly what I predicted months ago here on Roxum TV. And I would say that rally could definitely keep going. But one thing I'm very concerned here, like, is the daily hour size. So we do the vertical line. If we do it here, just like keep doing it. So like one thing I noticed on the daily hour sign, if we draw a line, so connect the line of the top of the hour sign, so there's a trend line going down, and whenever we reach the top of that line, there is a huge correction on the hour side and also on the price action. So if we take the percentage wise, so from the top, we reach 126K. And once we reach the top on the RSI as well, that was a very brutal drop to 80K. So that was a 35% reduction. Same goes for here. Like we reached the top, that was a bear flag as well. So top of RSI, and then that happened to be the price action. So when I say the top, is I mean local top, okay? So we reached the local top, and look at this. That was another 38% reduction. Correction from the top of the RSI. So if this is the local top, like another local top, we are seeing if we take from the top to maybe say like 30%, that would bring us to $54,000. If we go even further, like 35%, that will bring us to $50,000. So that is a level I'm watching. Like point being, I'm not turning bullish. Like it looks just like another relief rally to me. And relief rally in a bear market is actually very usual. So it's not like very prevalent. But like that being said, one thing I'm quite optimistic is that we have this rising support on the daily RSI, and so far we haven't lost that support yet. But when we lost it, so if there is like 2 or 3 daily candles consistently closing below the rising RSI support, that means the relief rally is officially gone, and we are entering into the later stage of the bear market. But like nothing has really changed, I would say. And according to the 4-year cycle, the absolute cycle bottom will not happen until October 2026. Like I know this is very controversial. Like just because it happened 3 times in the history, it's probably not going to repeat again. But like not just the 4-year cycle, but like even looking at the structure, like the pattern, the bear flag. It's just like whenever we go to key resistance, we just happen to get rejected yet again. So nothing changed from my analysis. And if we zoom out to weekly, things are getting more interesting. And again, so actually let me remove the vertical line. It's very confusing to read. So like this bear flag is still valid, but one thing it changes is that I drawn this rectangle, this region, again, like months ago. So 77K to 80K. And I just love how TA works. Because like whenever, okay, first of all, we are at this like fresh weekly candle. Today is Monday. So let's talk about the prior weekly candle, because this is interesting. Like we touch this region, and this region, again, as I mentioned, this is a key resistance. Okay, if you guys don't believe me, my track record, if you can go back to my previous shows on Roxanne TV, like I talk about, we could continue this rally, but like having a weekly candle actually closing inside this region or above this bear flag, this top of the bear flag, I don't have much conviction, and looks like is another valid point from TA. And right now, like as long as we could hold the rising support, as I mentioned on the daily hour sign, this relief rally can continue. But like 77K to 80K, that is a region that is like a strong resistance. And the reason why this is so important, like the weekly candle, we got rejected. And so as the top of the bear flag, top of the resistance line. So all the critical levels we talk about, we got rejected, boom. Now we got a fresh Monday weekly candle. So this region, why I talk about this so much, like if we don't manage to close inside this region, just forget about the people talk about we are entering the bull run, the bear cycle is officially over. And yeah, so that's it. Like that is the I haven't talked about the region. Okay, so like why I stress about 77K to 80K is because like there isn't much trading data zooming out on the weekly candle. Like we didn't even touch that back in 2024. The first time we touched it, it was like November 2024, and we didn't spend much time inside here. And same for 2025. And when we lost it, that was just like a 2 weekly candle kind of inside this region. So this region, I'll say like is a free trading region. That's why I look at this region very important. And yeah, let's see how long this relief rally going to carry on. Okay, that was the quick update for the price action. We'll take a short break from here. When we come back, we are diving into the biggest DeFi hack we have this year in 2026. So we are talking about like nearly $292 million was stolen from a DeFi protocol. We're going to dive into how the hackers did it. Should we be concerned, and should we still be using DeFi at all? So if you find these stories interesting, make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxanne TV, and thanks for sticking around with us after the break. So let's start with the biggest DeFi hack we have seen this year. Nearly $292 million was stolen from a protocol called KelpDAO. But the real story is that the damage did not just stop there. It spread into one of the biggest DeFi platforms, and of course that being Aave. And suddenly even users who did nothing wrong were at risk. So let's break it down what happened. An attacker found a weakness in a cross-chain system used by KelpDAO. They were able to create and unlock a large amount of token called rsETH, so rsETH. And there were about 116,000 tokens, which was worth almost $300 million. Now, here's the key part. This was not a classic code bug. The problem actually came from the system that was set up. In simple words, the system trusted too few validators. So when the trust point was broken, the attacker could fake messages and mint assets. This is important because it shows something most people miss. Even if the code is safe, the setup can still break everything. Now, here's where things get very serious. The hacker did not just steal the tokens, they actually used them. They took the stolen rsETH, deposited into Aave, and borrowed real ETH against it. So now the system had a problem because the collateral was not even real, but the borrowed ETH was real. That creates something very dangerous, which is bad debt. This is part of most people do not expect because many users on Aave never even touched rsETH. They just deposited Ethereum. They thought they were safe, but they were not. The reason why is because Aave used a shared pool system. All assets are actually well connected. So if one asset become too toxic, the whole pool could feel it. This is exactly what happened. ETH utilization on Aave jumped up to 100%. That means there was almost no Ether left to withdraw. So users who did nothing wrong suddenly could not even access the funds. Once people saw that risk, of course, they moved very quickly. Large players like whales, funds, exchanges, they all start pooling money out of Aave, billions of dollars left Aave in a very short amount of time. This is what a DeFi bank run looks like. So no lines, no panic in stress, just wallets moving fast. And when liquidity disappears, everything becomes very fragile. This is very important because Aave was not even directly hacked. Its code was not broken, its code is fine, but it still took damage because DeFi systems, they are all connected. When one profile fails, another one absorbs that shock, and that shock would actually spread. And this is the contagion effect in DeFi. It moves very fast. And if we go deeper, because the biggest lesson here is not just bridges are too risky. Of course, we all know that most of the DeFi hacks, because caused because of breaches. The real lesson here is that like security is not just about code. It's also about how the system is figured, how many points of failure exist, how fast teams react. Like in this case, like one key problem was simple, like too much trust in too few validators enough to break the system. But to be fair though, well, where is that? Oh, okay, don't have it here, but whatever. So like to be fair, like the team responded very quickly. They paused the system within about an hour, and that likely prevented even more loss. But by then, the attacker had already moved the funds, and the damage had already spread to Aave. Like this shows one truth: in crypto, speed matters, but prevention matters more. After this happened, like other platforms started reacting, like some paused parts of their system, others limited exposure, because once one piece breaks, everyone starts asking, like, are we next? And that fear, of course, spread really fast in crypto. So this matters because, like, okay, what should you take from this news, right? Like, if you not even using KelpDAO, like first, like, do not just ask if the protocol is audited. Also ask questions like what assets are inside the pool, the breaches involved, is the risk isolated? Second thing we have to learn here is that liquidity matters more than yield. When everything is calm, people chase returns. But in a crisis, the only thing that matters is that can you get your money out? That is to watch actions, not words. In stress moments like this, like big players do not wait. They actually move the money and tells you more than just some words or some statements that they made on X. So here's the truth like most people don't want to hear. Like there is no safe protocol especially in DeFi. Like only different types of risk. One gives you market risk, another gives you bridge risk, another maybe gives you hidden risk. You are always choosing some risk, choosing something. And the real question is that, do you understand what risk you're choosing? The bigger question here is like, this was one of the biggest DeFi hacks, DeFi events of the year, not just because of the money involved, but because what it showed. DeFi is powerful when everything works, but when one piece breaks, the system can amplify that damage, and that is the trade-off of DeFi. The bottom line is $292 million was stolen. The attacker used it to drain real Ethereum. Aave hit 100% utilization. Billions of dollars rushed out, and the shock spread across the market. So this was not just a hack. This was a chain reaction. And the biggest risk in DeFi is not always the platform you're choosing, it's a platform connected next to it. So like right now, I'm actually staying away from DeFi, and speaking of altcoins, I'm not touching too much altcoins right now, and it's down quite significantly. Another example that I could give out is like this token. So this RAVE DAO token, it goes from 25 cents to $27, and then it crashed 90% in a day. So this is not normal. It's definitely not organic. It's not like some just market volatility. That is something else. And of course, like once again, Binance is very much involved. So what just happens that this project, RAVE DAO, they launched a token called RAVE. And within days, the price exploded over 10,000%. And suddenly it collapsed 90% in 24 hours. Over $5 billion in value just gone, just like that. So if we take a look at this RAVE token price on CoinGecko, it skyrocketed well, actually it just happened on 18th of April, and right now it crashed back to almost nothing. And here's where it gets very serious. Like on-chain data shows something very simple about this project. About 90% of the supply was actually controlled by just 3 wallets. And if we let that sink in, like 3 wallets, that's not a market. That is very much control. Now, here's how this likely how it play out. So step 1, usually like a large amount of tokens was sent to exchanges that actually signals like, oh, sell pressure is coming. So traders start shorting the token. They bet the price would go down because they thought they're smart. Step 2 is that like these tokens are suddenly pulled back, like price goes up instead. These tokens are suddenly like I'll say pull back, so that's why it goes up very fast. And short sellers get liquidated. And then step 3, price just keeps pumping. If we go back to the chart on CoinGecko, it's just like non-stop pumping from just little over $1 to gosh like a 26x. Like of course it depends on your entry price. And keep going up. Of course, that would catch attention from traders, from retail traders, I would say. Okay, more traders jump in, FOMO kicks in, and finally, step 4, the real selling begins and the price collapse. And that is obviously a trap. Like a lot of people got caught in the middle of it, both shorting the token and also maybe trying to get that from spot trade, thought this is the real game, this is the real gem. So during the pump, over $44 million in positions got liquidated, mostly short sellers, of course, people who caught, they were people who thought they were very smart and people who thought they understood the risk. But in a control market, like there are only 3 wallets we're talking about, you're not actually trading, you're just reacting. Now, here's the part we really need to talk about. Like, after the damage is done, after billions were created and destroyed, Binance and BitGet said they are investigating. So let's be real. This is the same pattern we keep seeing. Like something pumps really hard, something collapses, retail gets destroyed, and the exchanges say like, oh, we are looking into it. So here's the real question. Why does this like always happen after the fact? Why not before? Why not during? Because let's be honest, when a token moves 10,000% in a few days, that is not subtle, that is not hidden, that is very visible to everyone, especially exchanges. This is where we need to zoom out because like this is much bigger than just like RAVE token because like things like that happen on a daily basis in crypto. Like centralized exchanges are not just neutral platforms. What they control is that they control listing, they control liquidity, they control market assets, and they control leverage. They see everything, like from flows to wallets to order books to behavior. So when something like this happens, you have to ask, like, did they not see it? Did Binance not know or BitGet not know? Or did they just simply allow it? Now, let's take a look at the project itself. Like RAVE came out and said that, okay, here's the post on X. So they came out and say that and explain why 90% of supply was in a few wallets, why tokens were moved before the pump, and who controls those wallets. And here's another key point. They admitted they may sell tokens to fund operations. So if we think about it, the same supply that controls the market can also be sold into the market at any time. So let's be honest, like we have seen this before, like just different token, but very much the same structure. So there's high concentration, very fast pump, forced liquidations, and sudden collapse, and then like no clear accountability. Retail traders think they are trading charts, but in reality, they are trading inside a system they cannot control, where supply is very concentrated, liquidity can be pooled, and prices can move very fast. And by the time you react, the move is already done. So what is the lesson here? Like, why are we talking about this for so long, Jamie? So the lesson is quite simple. If a token can move 10,000% in a few days, it can also go to zero just as fast. If supply is concentrated, you're not early, you are the exit liquidity. And if you are relying on exchanges to protect you, you're already too late. So the bottom line here is that the real story is never about crash like this. The real story is the system where these moves keep happening over and over again, where retail keeps getting trapped, and where the same names just keep popping up, keep showing up after the damage is done. Well, Binance say they're investigating, and yeah, I'm sure we can count on their words, right? All right, so that is pretty much all I want to cover in today's show. Make sure to give us a follow on X. So my personal X is jamjamcrypto_io. Make sure you have _io instead of jamjamcrypto, my hacked account. Oh, I just realized they changed the name again, so to Martin, which is great. So jamjamcrypto_io. Make sure to follow Roxham TV on X as well, because we have regular news coming out on hourly basis, not just about Bitcoin, but also about global news, about geopolitics, about AI. So point being, there's so much valuable content here on Roxham TV. So make sure to subscribe if you haven't already on YouTube. Make sure to give us a follow on X and like the video if you haven't already. So as always, my live shows here is Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels. So being my own YouTube channel, so Jam Crypto YouTube channel, and also Roxham TV YouTube channel. Thank you guys for watching, and I'll see you guys in tomorrow's show.